All right, guys, Baidu just reported, Home Depot just reported. Let's cover Baidu first. They are China's #1 search engine, controlling 84% of market. That's pretty solid. I wonder what's Google? We want to find that one out too. But anyways, Baidu just reported EPS of $16.10. I don't know if that's converted the proper way, but beating $12.20 expected. Revenue of $31.14 billion versus an expected of $29.92. So not only did they beat, they crushed. And that's a huge thing. Now remember, if you're new to the channel, for both Baidu and Home Depot, we could not care less about the actual beats versus not beats in quarterly calls. What we use it as an opportunity. Hopefully there's a temporary bad news announced. They miss in some sort of fashion that drives the stock price down. So we're able to buy companies that we like at lower prices. Right, Mo?
Yep.
All right. Google holds 85%. Same as Baidu, basically. So they both control the same marketplace, but I think Google's is a little bit bigger in the sense of international, worldwide versus China. Okay. So let's pull up Baidu. Do you have their earnings release, Mo?
Yeah, I'm looking through some of their highlights. So they returned $195 million to shareholders in Q1. Let's see here. Apollo Go. Wow. This Apollo Go thing. This is their autonomous driving. It provided 660,000 rides in the first quarter. That's pretty wild. Based on what we're seeing in the United States, we're not having a lot of companies that are doing that. Let's see. What else do we have here? Well, go ahead. You can keep going.
Well, some of the things I don't. So this does not include today's report.
Okay.
But they're selling at a 72 PE over the last 12 months. But the last 5-year PE is only 22.5. So let's go check out their net income to see. There obviously was a big drop. Okay, so it's been a little inconsistent last 5 years. 4.25, a loss of 300, a gain of 3.4, a gain of 2, and a gain of 600 million. Big differences across the board here.
Yeah, that's big swings.
Big differences. Let's see. Okay, so look at the other income expenses here, Mo. Okay, look at this. This is funny. 2 years back to back, the exact same income versus expense, but a couple of big losses here along with a big gain. So guys, when you're looking at inconsistent earnings, the first thing I do is I scroll up to see, are there one-time write-offs? Other income and expenses could be one-time write-offs and gains, right? Some sort of sale of an asset that either generated a gain or a loss. And these are things you want to take a look at. Now, let's look at operating income because that'll be before the other income and expenses. Also inconsistent though.
Wow.
It's stabilized, but it's not exactly increasing here. I mean, look at it 10 years ago, in the last 10 years. In 2014,
it's really pretty similar.
Actually, this is China, so they released their information a little bit differently. So let's go to annual here.
Good point.
All right, so still showing generally the same thing. I mean, last year they did 1.5 billion. 10 years ago they did 1.5 billion in profit. But look at their revenue difference. 3 billion to 11.6. So you guys, if you have our software, we take the data feed in. And not every country has the same requirements the US has. So with China companies, make sure you change to annual and not 4 quarters. Okay? Make sure you change this to annual in all Chinese companies. I always forget this when I'm doing it, but it's a great thing to show on the channel because we want to make sure people understand this. All right. Let's go to operating income again. Man, see, I don't like this, Mo. Look at their operating income. 10 years ago. I mean, just
basically the same with a couple of ticks up and down. Yeah.
So what's the story here? I mean, now it could be that they're spending a lot of money growing and their operating expenses are increasing like they have. Look at their operating expenses. They're up almost 12 times, at least 10 times. Yeah, that's big time. So their revenue is up 4 times, not even, and their SG&A expense is up 10 times. R&D up 10 times. Mm-hmm. Man. Okay. Now, there could be a perfectly logical explanation for that. They're just trying to grow. And they're doing a great job of driving that top line. Oh, look at the revenue here.
Yeah.
Okay, so let's understand what the operating revenue versus revenue is here.
Right.
What was that, Mo?
Big difference.
Correct. And this $31.4 billion.
It's been progressively getting bigger over the years, that gap.
Was this for last year?
Which one?
this Baidu number, what was reported today? It wasn't the quarter. It was for the year, right?
Let me go to their...
No, first quarter. It must be in their currency, their Chinese currency. Yeah, because look, go up to the top and tell me what the revenue was in U.S. dollars. Yes. Okay,
Yep.
Makes more sense.
Okay.
Okay, now, okay. It's very, very, very interesting. So it's all about the expenses. Are they sitting here and do they have higher expenses because they're trying to grow and gain more market share? This is the Amazon method, except Baidu's at least making money. Amazon was not making money, I think, for the first 17 years. So there's a lot of issues there about that. What's the conversion in their currency? 5.6 billion to 800, that's 1/7. So their EPS for the quarter was roughly $2 and what's 16.1 divided by 7? $2.30 for the quarter. They do that for the year, it's $8. The stock is currently at 120. Oh wow, it's actually pretty even today, Mo. They crushed.
Wow.
And look at the stock. That's kind of surprising.
R&D expenses decreased year over year in the quarter.
Decreasing 3%, primarily due to decrease in personnel-related expense. Okay.
Selling general administrative expense increased 20% year over year due to an increase in channel spending and promotional marketing expenses.
Look at that. Operating income was $725 million. They don't talk about increase, decrease. They're just saying operating income. All right. Okay, so total other income was $378 million, which mainly included a fair value gain of $1.5 billion from long-term investments. Okay. So these are the things, guys, that when you read their reports and you can take an unbiased view, actually it's somewhat biased for the company because look what they're doing there. Yeah. It doesn't matter what currency is as long as you're looking at those kind of things. I guess for me, I've got to sit there and understand how are they growing the business.
Check out their cash flow too. I mean, they're doing.
Are you on annual?
I'm on annual. They're doing less cash flow now than they were in 2012, with some big spikes in there, almost to $3 billion.
But again, Mo.
Actually, it was almost $2.7 billion last year.
But again, if they're spending a lot of money in terms of growing,
True.
It's going to affect those numbers.
True.
We experience it all the time as a company. Our real estate business generally doesn't have positive free cash flow. Why? Because we spend every dollar we make reinvesting back into our properties to get higher rents. So it can really sway what looks like. Now, granted, those are capital expenditures, but the operating income would still go up. But again, if you're a regular business and you're hiring people to grow, that's going to affect your operating profit. So I'm not against Baidu right here. I'm just sitting there saying these are the things you need to consider when you see such stagnant numbers like this. 10 years of no growth in free cash flow. 5-year average of $2 billion. All right, let's take a look at analyst estimates. Analysts are expecting $9.50 a share this year, which would put them at about a 13 PE right now, growing low to mid double digits, and revenue growing, expected to be $20 billion this year, growing high single digits, low double digits for the following years. So pretty good growth. I'm actually surprised at that growth level. I would have thought much higher.
I am too. That's why I'm sitting here confused because this is supposed to be a growth company and they're growing high single digits. That's what analysts are expecting? That seems very low.
How many analysts are? Is it 41 to 4?
30 to 4. But still, look at this. From 41 to 38 to 26, you would expect these three numbers here to be a little bit higher.
And the reason I expect higher growth is China is still in a fast-growing market economically. Yes, their population just saw first decrease in 60 years, but fastest middle-class growth in the world. When you have a poor population that in a growing country, you're going to see a lot more people become economically advanced, right? That's why in the US, we're having a hard time because so many people are already well-to-do. Our poor are still richer than the middle class in China, right? And that's the thing and I don't know if that's an accurate statement, but the point is, our poor are here, they're poor down here, right? So at some point, our poor are doing better than a big chunk of their population.
Right.
So let's take a look at Stock Analyzer tool for Baidu. And again, remember guys, we're doing $7 for 7 days, $1 a day, gives you all these tools in this drop-down menu. But most importantly also, Stock Analyzer tool is our most popular feature, 1.3 million uses last year. and the Everything Money community. If you have comments and questions about Baidu, you can go in there. Thousands of people in there talking. I'm sure the conversation is quite engaged for Baidu. So Mo, you do a 10-year analysis. I'll do 20. Okay. We're going to stay here on the video. I'm going to talk out loud while I do this because it is a 20-year analysis and it is China. So you're really making a long-term bet on China, but Mo's going to do 10 years.
Yeah.
So don't listen to me, Mo, because I don't want to sway you along the way.
I'll put my earmuffs on.
Put your earmuffs on. Man, look at that revenue growth. It actually wasn't that much over the last 5 years.
No.
That's incredible.
I'm going to have a pretty big spread here.
What do you mean? Oh, yeah. Yeah, it's not that much growth. Okay. So let's go. Okay. Profit margin. Let's say. Okay.
Yeah, let's see what that is.
PE.
I don't think I've run anything on Baidu before.
I don't think I have either.
Unless we did a video previously, and I just can't remember.
So I'm putting in, okay, Mo, so what'd you put in for your revenue growth numbers?
So I did 4, 8, and 12.
Okay, I did 4, 7, and 10.
Okay.
Which I think for 10-year analysis that Mo's doing, 4, 8, and 12 is great. And this is high, I think. Yep. However, it is China, a lot of growth potential economically, but there are still a lot of unknowns. Profit margin, Mo.
I did 15, 18, and 21.
That's funny. 14, 18, and 22. And I did the same thing for free cash flow.
Yeah, I did my same numbers for free cash flow margin.
PE.
15, 17, and 19.
Same thing here. What'd you do for your desired return?
So I did 10, 12, and 14 because I feel like 4% is low revenue growth, and those are bad margins.
I still think that the China unknowns justify putting a little bit more margin of safety in there. That's what I think.
I don't disagree.
So guys, the higher return you want, the more margin of safety you get. That's the point. So as my assumptions went higher, I went for a higher margin of safety. I'm gonna hit the analyze button.
Okay.
Wow. Interesting. All right. So I've got a low price of 95, a high price of 207, a mid price of 145.
I have 122 on the low end, 267 on the high, 183 in the middle.
All right. So guys, this could be interesting. Do your own research. Don't just do it based off this. The one thing I want to mention that I forgot to mention here, look at their enterprise value. Their market cap is 44 billion, enterprise value of 41. So they have net more cash on hand than total debt. That is awesome. It's hard for companies like that to go under. Now, we will say, we've always had concerns about China in terms of reporting and everything like that. So just keep that in mind when you're looking at companies. Let's look at Home Depot. Home Depot, EPS of 382, beating 379, revenue of 37.3, missing $38.4 billion estimate. All right.
Has to be their first
I thought they missed on EPS too, but they did not?
That has to be one of their first misses in a while, right?
Yeah, in terms of revenue?
Yeah.
So here's what happened. They blamed the cost of lumber being down. Because remember, guys, if lumber prices plummet, then their revenue is going to go down because they can't get as much money for the lumber. And they also blamed the weather issues in California for causing problems in their revenue. Now, guys, the stock is currently down 2.25%. Remember, if you like Home Depot in the long run, you look forward to them missing and doing these bad things. You want to be able to buy them for a cheaper price. Look at this, Mo. December 6, 2021, their all-time high of 420.
Wow.
December, this is not even 2 years ago, a year and a half ago. 420. I wonder what we were saying back then for our cost, for our value.
Yeah, it'd be interesting to go find that.
Why don't you give us a little update in because I know there's comparable sales were down.
Their comparable sales declined 5%. Sales declined 2%.
Well, that's what their impact for guidance. That's their guidance.
Oh, okay.
Yeah.
Sorry.
So let's go.
So it's funny that this is one of the few companies out there that's done it. Given the negative impact of our first quarter results, lumber, the weather, like you were saying, they have shrunken their guidance going forward.
Yes.
We have not seen that a lot out there. We've seen people stay the course or increase their guidance. Yeah, I was very surprised by that one. Let's see up here. Net earnings for the first quarter were $3.9 billion, 382%. Is there anything in here? This might be one of those companies.
Their same-store sales were down like 4 or 6% or something like that.
I think this is one of those companies that might say
Scroll up a
everything
little bit,
there.
just up a smidge. Up, back to that chart.
Here? Oh, you want this?
Yeah.
Okay.
Is there something in there about same-store sales? Look, everything's basically down.
Yeah.
Everything is down.
Let's see here.
Right here.
Average
So look, customer transactions down 4.8%. Sales per retail square foot down 4.7%. Average ticket price was up though, 0.2.
It could be due to inflation.
Sure, but remember look, so here's lumber prices in the last 6 months. Here's what's interesting to me. There we go. They're going to blame this, going, our quarter started here, right? And lumber prices were at over $500 per whatever metric, and they're currently at $340. I don't know what percentage of their revenue comes from lumber.
Yeah.
I don't know.
Repurchasing.
Of common stock. They're buying back common stock. We don't know if that's a good thing or a bad thing. What is their... So let's look at their dividend yield, Mo. So look at this. Their 5-year average free cash flow is $12.4 billion.
Their cash flow.
Yes. But this is what shocks me here.
Holy.
Now, I'm actually, remember, they have stores. They can probably open stores and get a really high return on their money, right?
Yeah.
But the question is, where's the growth potential?
Right. One thing I always like to do is I like to look at Lowe's, Home Depot, Walmart, Target, those types of things to see kind of the health of the economy. And that's interesting to see the fall here. But I will say this. Home Depot went on an incredible run since COVID. Like,
oh, for sure.
People were renovating and this. So maybe this is just normalizing, coming back to normal levels.
I mean, look at the revenue. Look at the revenue, guys. Here's COVID.
Yeah, they're still.
And next year, 144.
Yeah.
Jumped up big.
So I'm not panicking yet here, or getting too excited about where the economy's going, but.
All right, so.
It's a miss.
Let's see what analysts are saying here.
It's definitely a miss.
All right, very, very little growth overall.
I mean, where do you get growth from with somebody like them, you know?
I guess this is their year finish. All right, they're going to get mid-single digit growth in terms of EPS, low single digit growth in terms of revenue. Sounds about right, which is interesting because they're going to open more stores. Question is how many?
How many? I wonder how many stores they have.
Total Home Depot stores.
As of March 31st, 2023, 1,996 in the United States.
So 2,000 in the U.S.
Yeah.
2,000 in the U.S. The state with the most is California. Makes sense. 2,000 in the U.S. All right, that's 40 per state.
Oh, here's the breakdown. We have 70.
So look at the population per store.
Yeah.
So I imagine, okay, scroll down a little bit. All right. American Samoa does not have a Home Depot. Okay. We'll let that slide.
Well, when they make one there, they can get revenue back to 15%, right? Growth.
Right. All right. So guys, again, 284 is the stock price right now, down only 1.7% now. Let's do the stock analyzer tool and determine our price for Home Depot. Remember, every time we do these videos, assumptions change. I forgot about the return on invested capital. Home Depot to me is a company that is probably going to be around for a while. Would we not agree with that, Mo?
Yeah, I don't think they're going anywhere.
I would be very surprised if Home Depot was gone in the next 10 or 20 years.
Yes.
Because you still want to go there and get advice from people and things like that.
And try things.
What was that?
Try things.
Yeah. And if you're like, okay, I need to go get something real quick. So
I mean, contractors go there like nobody's business. So contracting isn't going away.
Yes.
All right.
Well, that's not about contracting. It's about, can Amazon figure out a way, or can some other company figure out a way to deliver goods to somebody faster? That's the question. Now, they're hoping that Home Depot figures that way out for contractors.
Yeah.
Like, hey, give us your list, we'll come deliver it to you, which they already do have.
Quickly, though.
Yes, that's the
within
thing.
the hour.
Yes, correct. All right, so I'm going to do a 20-year analysis. Mo's going to do a 10-year. Let's see here. It's kind of interesting.
That profit margin has been extremely consistent.
Yes, it has been.
What I'm going to do with this. Free cash flow margin's been consistent too.
Yeah, it's all been consistent. Now, while Mo finishes his, here's what I did for my low, middle, and high on my assumptions. 20-year assumptions, again, 3%, 5%, 7% revenue growth. 7's a lot. Guys, they did 7 over the last 10 years. And a large chunk of that was in the last 3 years. So that's a really high number. Profit margin. I did 9.5, 10.2, 5, and 11. because their last 10 years was 9.5. So I'm sitting there going, okay, it's probably going to be more like that. Free cash flow, 8.5, 9, 9.5. PE, I did 14, 16, and 18. The growth potential is not there, but the ROIC, I mean, look at these ROI, look at this ROIC. This is huge. They can buy back a ton of shares, pay that dividend out. And my desired return, I put 10, 11.5, and 13. Because in these levels right here, I'm okay buying Home Depot to make 10% return.
Yeah.
Mo, what'd you do for your 10-year analysis?
So for 10 years, I did 2, 4, and 6 for revenue growth. Profit margin, 9.5, 10.5, and 11.5. Free cash flow margin, a little bit lower, 8.5, 9, 9.5. PE, 15, 17, 19. And I went with 19 because the ROIC is incredible. And they're not a moat, but they have moatish tendencies.
Oh, I would say that, yeah. I mean,
between them and Lowe's.
Yeah, them and Lowe's.
Yeah. So 15, 17, and 19 for price to free cash flow. And my return, I did my 10, 12, and 14%. So
all right,
let's see.
Here are my numbers. I have a low price of 190 to 210, high price of 260 to 304, and a middle price of 220 to 250. I have it on my watch list at 230 as a point. It used to be 200. I've increased that. I have it on my watch list now at 230 to start selling puts at lower prices. But at 230, I look at it going, it's below both my middle numbers. It's Home Depot. They pay a nice dividend. But it just goes to show you how hard this upper level is to justify today's price. And especially when it was 420.
Yeah.
Mo, what's your numbers?
So I have 181 to about 200 on the low end, 235 to 285 on the high end. So if that makes sense, but I don't think it does. 207 to 242 in the middle.
So you're
at
at you're
225.
Yeah, 225. So we're at the same level here. All right, guys, remember, before you get concerned going, it's not going to go to 225. It was 420 just 18 months ago. Now it's 280. Just be patient, because that is what makes a good investor. Pouncing when things hit the price you want. Where did it hit the low of COVID?
During COVID, it was 152.
The low of COVID.
The low of COVID.
All right, guys, thanks very much. Subscribe to the video and check out $7, 7 days, everythingmoney.com for our software. Take care.